So now in our previous class we stopped at method of allocating fixed cost, and I want to again repeat the title, and then we will look more in depth about how we do that. So we saw the economic map. We saw that the economic map basically provides all the information that we need, both for economic analysis and also for monitoring, which we'll see later on, for controlling the budgets of the different units in the organization. However, we have another goal in our set of three goals, and that is to present the budget to outsiders, fundraising, all kind of stakeholders in the organization. And since these specifically donors who are buyers, they are interested only in a specific program and not in the entire organization, then we have to present the budget of each program with a certain part of the fixed cost allocated to each one of them in order to present the full cost of the program if we want to fundraise. And this is what we want to do now. So first of all, again, to state it maybe in the third time, but it's always important, the choice of the allocation method should be derived from the goal. The goal here is presentation. It's a marketing issue. It's not a mathematical issue. There are no mathematical rules on how to allocate fixed cost. Every method is equally true or equally right as the other method. It's basically arbitrary. Okay? So if we choose an arbitrary method, it should serve us in the best possible way, which means it should be convincing. Now, when we choose the allocation method, we need to get some kind of an allocation scale, which is a percentage scale that says, for example, if we have three programs, then we can allocate the fixed cost by, let's say, third. That will be a method. I don't know, 50, 30, 20, 90, 10, 0. These are all allocation scales, okay? The only rule for allocation scales is that the sum has to be 100%, okay? We have to allocate everything. And in order to convince that the method of allocation is justified, we have to, or we not have to, but usually we use cost drivers. Cost drivers are variables that their purpose is to convince whoever we present the budget to that it makes sense or it is justified to allocate such part of the fixed cost to this program. And we started to discuss the first cost driver. I'm showing you here the most common cost drivers, and then we will see how practically we use them. So these are the most common cost drivers that are used. The first one that we saw, which is used usually for expenses that relate to the facility, rent, maintenance, taxes, utilities, is the floor area. Now, floor area can be measured in a more accurate way, like 200 square meters per 400 square meter, or can be estimated. For example, I'll give you a real-life example. In my organization, when we have a building 4 floors, and we negotiated with the municipality of Jerusalem to transfer the responsibility for the building for the school to the municipality. So there was a discussion about how to divide the fixed cost of the building: electricity, water, heating, maintenance less. These expenses basically. And the municipality sent an engineer, and I showed her the drawings of the building. But at the end of the day, she said, look, there are 4 floors. We occupy 3, you occupy 1. So you pay 25 and we will pay 75. But basically, it's the same logic. Okay, we have 4 floors. They are all identical in size. So we'll divide the cost based on occupancy. So if the municipality occupies 3 floors, they will pay 3 out of 4. And if we, the non-profit, occupy 1/4, we will pay 25%. Okay, so this is a cost driver which is based on floor area, and it is very useful when we talk about these types of expenses. Another cost driver is the number of staff or number of positions. Okay, it's not exactly the same. Number of staff is head counting. How many people do I have in my organization? While number of positions can be different, because I can have one person with a full-time job and then other 10 people with 25%. So if I count position, then the 10 will be 2.5. Okay? So it's a matter of choice. Now this can be useful for expenses, fixed cost that is related to staff, like staff training, for example, staff development. So if I have a training department in my organization and I want to allocate the cost of the training department between the different programs, I can argue that the more people in the program, the more resources it takes from the training department. We all understand that although it sounds very tempting to believe in that, eventually the training department is a fixed cost. Usually it will be a few people who are paid. Their salaries are not exactly dependent of whether we have one more or two less employees. But still, it is a good cost driver for this type of cost. Another very, very common cost driver is the number of service recipients or beneficiaries or clients. And again, this can be used for if we have, for example, we have an organization, like the organization that we had in the example of rehabilitation for addiction. If we have a clinic that provides medical service for the people in the organization, or psychological service, and then we can use the number of clients, and again the argument will be that program with more clients will take more resources from the clinic or from the psychologist. Also programs like intake or outreach programs can be allocated based on the number of people that they serve. Okay, so if the Hebrew University, for example, has a registration department, then the registration department can be divided based on the number of students in each faculty or in each program, based on the argument that more students take more resources from the registration department. Okay? Then there is the last one, which will be our first example, and that is what is called the direct apportionment. That is used in many cases for overhead. Now, the direct apportionment is basically looking at the budget of the program as the cost driver. And again, the argument will be that management, general and management, has to manage the entire organization. Programs with a higher or larger budget consume more resources, so we have to allocate a larger part of the management cost to them, while small programs consume less resources, we have to allocate less resources. Now, if you have some kind or more, not some kind, if you have a more in-depth acquaintance with how organizations are managed, then you should know that it is usually the opposite, which means that the new programs, the small one that we just started, they will consume a lot of attention from the CEO, from the management of the organization, while the large one that kind of go by themselves, they're in a kind of automatic pilot, they consume less. But again, the argument for the direct apportionment is valid, and we will see that it is a way that it is used. Also, there is another method which does not involve any cost driver, and that is the negotiation method, which means that the organization will argue, I would like to put 35% of the CEO, the director's salary on this program because it takes 35% of her time or 35% of her attention. Obviously, nobody can prove that. we cannot put a probe into the director head and measure the amount of attention, and we also don't have a stopper to. But this is also something that in large organization, by the way, organization the size of universities or colleges, the allocation scale in many times is a result of internal negotiation between the different senior staff. It's kind of a give and take. But that is something that I have nothing to add about it. So we will focus on cost drivers that can be measured. Okay? So this is basically the way that we allocate fixed cost. And now I want to propose, again, it's not something which is a necessity, a method of allocating fixed cost using two layers. And I want to explain what it means. Now, since the goal here is to make the case for outsiders, donors, that the allocation method is correct, and since that we all want to work based on the criteria of what is called benefit to cost, which means that we don't want to spend too much time on preparing budgets more than is necessary, okay? Because basically it's not the mission of our organization. Then we should choose the more complicated methods only if they add value to our case versus the donors. And I will show you that the cost drivers is a more complicated method, and therefore my suggestion is to use it for the fixed program cost, while the direct apportionment is a simpler method, and therefore we will use it, my recommendation is to use it only for the overhead. Now, let me explain why. When the negotiation with donors about the cost of program begins, or when there is a negotiation, we want to limit the scope of the negotiation. We want to be able to convince our funders that the grand majority of the expenses of the program that we present is actually the program expenses, and to limit the discussion or the argument to a small portion. Okay? Now, if you remember, we had three layers in our cost structure. The first layer that was already allocated using the economic map was the variable direct cost. These are program costs that are related to the program in a very, very clear way, because if we don't operate the program, we will not have these, we will not incur these costs. On this type of expenses, there will be hardly any argument. I mean, if you present to somebody a program, let's say of training children from the social periphery on technology, okay? So obviously nobody will argue about the trainers, nobody will argue about the fact that we will need materials for that, we'll need internet connection, that will be given. Now, also, if we look at the fixed program cost, if we have a facility for that, a computer class, for example, then usually we can, under a reasonable argument, say, well, you know, if the maintenance of the computer class cost us X, then a certain percentage of that X has to go to the children who participate, to the program that the children actually use the computer class. So if we can create a cost driver which is convincing enough for that computer class, we can take this part of the expenses out of the argument. However, there is always going to be an argument about general management. This is given, unfortunately. It's not a good thing that people look at general management in non-profit as a bad thing, although we all understand that we cannot operate an organization without management and without general expenses, but there is always an argument about that, and therefore usually it will not be worthwhile to invest sophisticated allocating method in the GNM, and we can use the simple direct apportionment as our beginning or starting point in the negotiation, and whether we succeed or not, that remains to be seen. So the idea behind what I'm going to show you now is allocating fixed cost by two layers. The first layer, which will be used for the fixed program cost, will be by cost drivers. And the second layer will be for the general and management or for overhead, and we will use the direct apportionment. So we will start with the direct apportionment, which is the simplest. We'll see immediately why it's so simple. The simplest way to allocate fixed cost. We will see how the method works. We will see why it's very simple. And again, the advantage and the disadvantage of these methods is its simplicity. It's the same. It's in our advantage that it's very simple. But on the other hand, people who look at it may say, well, it's too simplistic. It's not exactly a true description of resources that are taken by the program. So in order to explain the direct apportionment, you will see this is the only example that I don't use Excel because it is so straightforward. Let's assume that we have organization with three programs, A, B, and C, with these budgets. Okay? 500, 300, and 200, which by some kind of miraculous way end up to 1 million. Okay? Now, on top of that, the organization has overhead expenses of 250,000, and here I simplify the example. Let's assume that there are no fixed direct here, which means we only have program costs, which are fixed variable, and we have overhead. The only fixed cost here is the overhead. Again, for simplicity. So the total cost of the program, of the organization, the full cost is 1,250,000, which is 1 million of the program and 250 of the overhead. Okay? So how do we apply the direct apportionment? There are two ways to do that. And we will start with the first and then move to the second. The first way is to look at the direct budget, total direct cost, okay, which is 1 million shekels. This is the direct cost of the programs. Direct is everything except for overhead. Okay? Now, the first program, program A, takes 500,000 out of the million, which is 50%. The second, 300,000, 30%, and the third, 20%. Obviously, they end up in 100. So this will be my allocation scale. So I create an allocation scale based on the direct budget of the program. What, Marwa?
I'm asking very minor questions. It's about the overhead. Overhead is supposed to be the cost of the management.
General and management. So why it's not the overhead?
No, I just asked about what's the overhead expenses.
Okay.
Like what? Everything you said.
First of all, look, let me tell you something. There are no minor questions. There are questions. And you will be surprised how questions who seem to you very minor will be relevant to the entire class. So it's better to, and don't be shy, don't be afraid. Sometimes people ask a question and they say, I want to ask a stupid question, and eventually it turned out that this question was a question that everybody in class were occupied by. So there are no minor or silly questions. So overhead, again, to define. And you are right that there are a lot of terms here, and we need to make our heads straight. So let's go back a little bit and create again order in the terms. So when we began the course, we looked at this table, okay? This is on page 2, and this is basically the defining table that we work on. Everything will be based on that. And we have 3 layers. We have the program, which is variable. It means the meaning of variable is that it depends on the existence of the program. Okay? Expenses that are allocated to a specific program, and they will disappear if the program will be closed. So that's layer number one. That part we don't have to load because it's directly attributed to the program. Now we have two components of the fixed cost. We have program fixed, which are expenses that are by definition program, like the rent of the facility, like the professional oversight, like the medical clinic that provides services to the entire organization. But they are fixed because they are not affected by the existence of any specific program. Okay, they're program, but they're fixed. And then we have the last layer, which we call overhead or indirect in the accounting language, and that is general and management. These are the bookkeeping, the legal advice, the CEO, the CFO, all kind of administrative expenses that are not part of the programs. Because programs can also have some kind of, if you buy pages for your printer, so the printer can serve the programs or can serve the administration. So this is the definition of overhead. And again, I want to remind you a table that I showed you in the previous class. Let me find it. If you remember, in the previous class, I showed you a table by the Fry Foundation, which exactly identified cost by this exactly the same criteria. They just call it in different names. So they call it program direct, program administrative, and general and overhead. Okay, so overhead is overhead, and program direct is what we call program variable, and program administrative, it's what we call program fixed. So different terminology, but exactly the same idea. Okay, so now it's okay, more clear? All right, so let's go back to our example. All right, so here we have, here in this example, I use only two layers. Let's put aside the fixed program. Let's assume that there are no fixed programs. So we have program costs, which are direct, and there is the overhead, which is the indirect. Okay, now I want to allocate the 250,000 of the overhead to each one of the programs. In order to do that, I use an allocation scale, which is based on the direct budget of each one of the programs by taking the weight or the part in percentage of that budget of the overall and simply saying that if this program is 50% of the direct budget, I'm going to load on it 50% of the overhead, which is 125,000. So the full cost of the program will be 500,000 plus 125, 625,000. Then I go to the second program. The second program is 30%. So I'm going to load on it 30% of the 250. That is 75,000. So that will be the full cost of the program. And then program C, 20%, which is 50,000, and then I have 250,000. Now, that is very important to remember, and then you see many times in assignment that students tend to forget that. In order to make sure that there is no mistake in my calculation, when I sum the full cost of all the programs, I have to eventually get the same number as here. This is my checkpoint. Okay, if I did all the allocation correctly, then the total cost based on full costing has to equal the total cost based on the direct costing. Okay, so I sum all the full cost and I get exactly the same amount. So this is basically the direct apportionment method, and the reason that I present it first is that this calculation may look simple or may not look simple, but there is a simpler way to make this apportionment or make this loading of fixed costs that makes the system very, very attractive. And in order to understand that, we will look at certain definitions, okay, which appear here. So I will now introduce a term which is called the overhead rate. Okay, overhead rate. And I will introduce two definitions of the overhead rate. Each one of them is used for a different purpose. Okay? So the first definition, which you may have seen in different scenarios, is the overhead rate which is used for measuring efficiency. So we haven't spoken till now about efficiency. We will get back to that later on when we look at the cost per client. But in general terms, when we talk about the efficiency of an organization, people who give money to nonprofits, people who donate, government, funding agency, they want to make sure that their money is used properly. Okay? Now, in the business world, the issue of efficiency is not really an issue because due to competition, non-efficient companies will eventually cease to exist unless the market is a monopoly, which means that if you want to buy a laptop and you define your specification, and then you look and you see that exactly the same specification you can get, let's say, a Dell computer for, I don't know, 3,000 and an HP for 4,000. So if the computers are identical, you will buy the cheaper one. Now, the fact that Dell, in this example, can produce computers in 3,000 and not in 4,000 means that it is more efficient. Okay? Now, what will happen? Eventually, everybody will buy the cheaper computer, and the more expensive will be out of business. So, in the business world, competition forces efficiency. The non-profit world is different. There is competition on donations, but usually there is no competitions on clients. Okay, and some organizations, they don't even have clients. I mean, if you're in advocacy, then who are your clients? The entire population. So the issue of efficiency is more complicated in nonprofit, and therefore people are looking for measures of efficiency. Okay, one of the most common measure, if not the most common measure, is the overhead rate. This measure is used, for example, by websites like Charity Navigator. Those of you who are familiar with fundraising in the United States, if you want to fundraise, and if you want to be able to get money, let's say for pension funds or stuff like that, you need to be at least 4 stars Charity Navigator. How do you get the 4 stars? One of the metrics is the overhead rate in the first definition. So there are a lot of deficiencies in this measure, and I will discuss them later on, not now. But we have to know because it's a very, very common measure. It appears in Israel. It is part of the government's assessment of organization. In the United States, it is in the external assessment, like Charity Navigator and organization like that. So how do we calculate the overhead rate? The overhead rate is defined as the overhead. And here I wrote explicitly, just to make sure that we all remember, that overhead includes, on top of the general and management expenses, also the fundraising expenses. Fundraising is defined as overhead. Okay? So it may be obvious, but I wrote it explicitly. So we have general and management plus fundraising divided by total income. Okay? Divided by total income. It is, in a way, if you want to describe this metric in a kind of verbal form, it's a donor will say, I want to know out of each dollar that I give you, how much goes to overhead. That will be the overhead rate. So if the overhead rate is 20%, it means that for each dollar that the organization receives, 20 cents will go to overhead. Okay, this is basically what the metric says. Again, I don't want to enter into this discussion now if it's good or bad. I just want to introduce it. So here in our example, we don't have income here, okay? But if we assume that income equals expenses, then the overhead will be 250,000 divided by 1,250,000, which is 20%, okay? So this is the overhead rate divided by total income. Another definition, which we will use for our discussion about fixed cost allocation, is the same nominator, general management plus fundraising, but divided by total expenses. Again, here in this example, we don't have income. We assume that income equals expenses, so it will be the same. But in real life, in most cases, income will not equal expenses, and then it will be different numbers. And we will see when we do a more realistic example how the overhead rate changes. Different definition is a different overhead rate. Now, the first one is used for efficiency. So we will postpone the discussion about it when we will talk more in depth about efficiency. The second one, which is more important for us right now, is used for the direct apportionment method. And the way it is used is by looking at something which is called loading factor. Now, I admit that I invented this term loading factor because people usually call this one also overhead rate. So we have a problem here that overhead rate, the same thing, relates to two different concepts. So in order to make sure that we don't get confused, I invented a new term which is called the loading factor, so that we will not call this one and this one overhead rate. Sometimes people refer to that as overhead rate from above and overhead rate from below, and there is a little bit confusion in the terminology, so I'd rather have a new term. So what is the loading factor? If you look at the results of the direct apportionment right here, okay? So, and if you check how much did we add to each program? To this program, we added 125,000 to 500,000. And to this program, we added 75,000. We loaded. Sometimes the term loading is a common term. It's like we load fixed cost on the program. So we loaded 75,000, and on this program, we loaded 50,000. Now, if you check, what is 125 out of 500? You will find out that this is 25%. What is 75,000 out of 300? Also 25%. What is 50 out of 200? This is easy. You can do it in your head. Also 25%. So there is a phenomena. This is something obviously mathematical. I'm not going to enter into mathematical proof. It's not important. But it is inherent in the direct apportionment method that there is a fixed percentage which we load on each program in order to get from the direct to the full cost. Now, where did the 25% come from? So again, this is also easy to see. If you look at the overhead and you compare it to the total direct cost, you can see that 250,000 is exactly 25% of 1 million. All right? So in general, if we look at our direct cost and we add to it overhead, which is X% of this direct cost, then this X% will be exactly the loading factor of each one of the programs. Okay, this is simple algebra, but we don't have to get into any proof. I trust that you will believe me in that, but if not, then you can try to prove it yourself. So now, why do we look at the overhead rate and not in the loading factor? Because there is a very simple relation between the loading factor and the overhead rate, which I'm showing here. The loading factor is basically the overhead rate divided by 1 minus overhead rate. In our example, the loading factor is 25%, 0 to 5. You all remember, right? Percentage and the fractions are the same. And that is exactly 0.2, which is the overhead rate, divided by 1 minus 0.2, which is 0.8, 0.2 divided by 0.8, or 20 divided by 80, 20% divided by 80% is exactly 25%. Don't worry, we'll do a lot of exercise with that. So it will be clear through, through hands, not through head. So in general, when we want to use the direct apportionment method, we don't need, you have it in your PDF of the course, Maro, on page 10. I mean, I don't mind if you take a picture, but you have it. Unless you want to take a picture of me, which will not add anything to your...
Because when I go home, I don't want to... I want to find this part.
That's okay. So please go ahead. Anyway, so if we want to use the direct apportionment, we need to know just one number, the loading factor, and that's it. We don't need to make this full calculation. The only thing we need to know is that the loading factor is 25%, and then we can add 25% to each direct budget. Now this is extremely useful, especially when you work in a very large organization in which you have a lot of account managers, people who do fundraising on behalf of the organization, but there are large fundraising departments, and each one of them work independently. So if you want to instruct your fundraisers about how much overhead to add, you can, by calculating your loading factor, you can tell them. I did that when I worked in the JDC. There were a lot of people who were doing fundraising. They were working directly with the field, getting the direct budgets, but we wanted to add some portion for the fixed cost. So I used to give them a number, add 18% to each budget that you get from the field, and that's it. We know that we are covered, okay? And that is the significant advantage of this method, that we only need one number, a loading factor, which can be derived easily by the overhead rate. Remember that this applies only to the overhead rate with method number 2, not to this one, only to this one. And the overhead rate is something that we know anyway, because we always know what is our total budget, and we always know what is the part of overhead. The only thing that we need to do is to divide overhead by total cost, okay, total expenses. So this is basically the direct apportionment. Again, the advantage of the method and also its disadvantage is its simplicity. It is very simple. It is very useful when you want to add a certain percentage to your programs. However, it is not always very convincing, okay? Because if you are asked by a donor, why did you add 18% to the program? And you say, well, look, it's based on the budget of the program, part of the total budget. Sometimes it is not. It is a good argument for general management, but it will not be a good argument, for example, for rent. Because it may happen that the program that you try to fund does not occupy any part of the facility. So why... it could be your largest program, but it's an outreach program. So why did you add part of the facility? So that is why we need to be careful with the method and to apply them according to what makes sense to others. Okay? Any questions? We will practice the direct apportionment, so don't worry, just an introduction. But any questions about the method before we move on? All right. So once we understand that, let's go back and look at our full costing example. So this table, which appears here, but obviously we will go and look for it in the Excel, allocation by layers, appears in your Excel file in the worksheet full costing. So until now, we worked on economic map. Okay, and now we move to full costing. Okay, and let's make it larger. All right. So full costing version number 1. So this is an example which is, I would say, these are real numbers, but I used real numbers to create some kind of simplified example, okay? And the example is based on the same organization that we began with, which is the organization that deals with rehabilitation of addictions. And I want to show you how we use the two layers to reach eventually full cost of the program. So the first layer is the program variable. Where is it taken from? So let's look at program A, 3,126,000. Now we will go back to the economic map, all the way to our initial table, 3,126,000. Okay, so the first layer is basically this example, A, B, C, and D, and E of the economic map. This is the first layer, and again, as I said, on this layer of expenses, there will be no argument. Nobody will argue that if we want to have a rehabilitation program for adults, we need salaries for caregivers, for whoever is in this salary, and service supplies, etc. Okay? So this is the first layer. It is taken from the economic map. We have it already once we created the economic map. So now let's see how we create, and you can see that program B, 3,169,000, 3,169,000. You can check it later and see that these are exactly the number. There's a formula that takes from the previous worksheet. All right. Now we want to use the cost driver method in order to allocate the cost component of the fixed program. Now, if you remember, and if you don't, I remind you, in this organization, we included all the fixed costs in one column. Later on, in the other examples, and also in the exercise, we differentiated between fixed program and overhead, which is a better way to do that, because it's easier than to do the fixed cost allocation. Here, I have to define what is fixed program and what is overhead. And just for the sake of example, I defined the expenses which are marked. If you look at your files, they are marked with a red color. So for our example, the fixed program will be utilities and municipal taxes, rent, and communication. And again, this is just an example. One can argue that, that there are different other components that can be fixed program, but this is just for the example. So for our exercise now, we will look at these cost components as fixed program, and the rest is overhead. Okay? All right. So now I want to determine which cost driver I want to use. The criteria, as I said earlier, is a marketing criteria. I have to decide what will convince my donors that this cost, or this part of the cost, should actually be related to this program. And here again, just for the example, I introduce two cost drivers. The first cost driver, which will be for the municipal taxes and rent, is floor area. And the second cost driver, which will be for communication, will be the number of staff. Okay? Now again, this is just for example, but the argument is pretty straightforward. For rent and municipal taxes, it makes sense that the larger the area that the program takes, the more resources it takes from municipal taxes and rent. And for the communication, one can argue that programs with more staff take more communication resources. More people talk over the phone, more internet, etc. Okay? Now, once I define that, I need to define what are the items that I want to allocate. So municipal and rent, you can see here the figure 806,000. If we go here, these are exactly these two. I don't know if you can see, but the number 806 appears here somewhere. But these are 6. You can add it. This plus this is exactly 806 and 797. And communication which is 231,993, is here, communication. Okay? And I want to allocate this part by this cost driver and this part by this cost driver. Now this demonstrates immediately why the cost driver methods is more complicated. Because when we use cost driver, we have to apply different cost drivers to different cost components, to different cost items, according to whether it makes sense or does not make sense. But in order to take these two cost items out of the argument, in order to make sure that people will be willing to donate to them, it is worthwhile to do that. Okay? While in general management, it may not be worthwhile to apply the cost driver method. All right, now, stage number 2, I need to create my allocation scale. Here, I gave you the allocation scale in percentage. In the exercise, you will calculate the allocation scale, but we saw already in the example how we create an allocation scale. This is how we create an allocation scale based on budget. Okay, we take the variable that we use, we sum all the variables, and then we take the ratio of each program out of the total. So just for example, if instead of 500,000, 300,000, let's say that we talk about 500 employees, 300 employees, and 200 employees, altogether 1,000 employees, still this program will be 50%, 30%, and 20%. And you will get training on that when you do the exercise. Here in the example, it is given, so this is basically the floor area allocation. Now, how I got to these numbers. So this organization has a large facility, very large. The grand majority of the facility is divided by the adult and the youth program. So basically I took 45 and 45, let's say 90% of the facility is to the rehabilitation program, divided half and half because they're more or less the same size, and the rest is more or less arbitrary, 4, 3, 3, because nobody will argue about these small fractions. Okay, nobody will argue about you said, well, I added 4% or 3%. Yes?
Usually these percentages are given in the exercise.
Yes, yeah. Or you're given the variables to calculate them. Yeah, of course. And in real life, you either estimate, which is this example, or here, number of staff is an accurate calculation. You take your, you take your staff list, and then if you want to do it based on staff and not based on full-time equivalents, which makes sense because you can say that people who work full-time or half-time spend the same time on the phone, maybe less time on the job, but the same time on the phone. So again, it depends. Then you take the list of your staff, and then you just count, and you say the number of staff that I have in program A is 36.9, 42. This is how it is calculated, and again, in the exercise, you will see how to do it yourself. And then comes the allocation part, which is relatively straightforward. For example, let's take this figure, 363,059, which we want to allocate to program A. So I'm going to show you how the formula was made. So we take the amount that we want to allocate, 806,000, we multiply it by 45%. Basically what we say is that since 45% has to be allocated to program A, then I will take 45% of the amount that I want to allocate and add it to program A. That is 363. Okay? And then the same with program B. Here again the percentage are the same, 45% of the same amount, so we'll get the same amount allocated to program B and so forth to all the programs. Now, checkpoint to make sure that there is no mistake. Once we did all the allocation, we sum all the amounts that we allocated to the different programs, and then we have to check that the sum equals to the amount that we began with. which is the 806,000 that we wanted to allocate. Once we did that, we know that there is no mistake in the calculation. Okay? Then we move to the second part. Now here, the allocation scale is different, but the method is exactly the same. We take the amount that we want to allocate, 232,000 almost, and then we take 36.9% of it will go to program A, and 42% will go to program B, okay, and so forth to all the program. And eventually, we sum all the allocated costs that we calculated, and we make sure that we came back to the same amount. All right? Okay, so basically once we have done that, and of course we can have many different cost components with different cost drivers, eventually we have the second layer, which is, this is the total program fixed. Okay, so let's do it step by step. So 448 is the sum of what we allocated to program A due to municipal and rent, plus what we allocated to program A due to communication. And the blue line is the total direct cost of the program. And you can see that we moved from 7.9. We began with 7.9 million, which is the program variable. Then we allocated the fixed cost, which altogether amount to slightly more than $1 million, the fixed program cost, which add up to slightly more than $1 million. And now we have 8.9 million as our direct cost of the program. And now we have only one last component to allocate, and that is the general and management. Questions until now? Everything is clear. All right, now, as for the direct apportionment, I'm going to show you how we do the allocation using both methods, the long one and the short one. Now, I want to tell you in advance that you are free to choose any method that works for you. Once we have learned the two methods, it doesn't matter to me or to anybody else what method you use. So you can use either the short or the long. Some people find the long method more convenient. Here in the example, I'm going to show you how the two methods work. So we will begin with the short method, okay? And then, let's see, yeah, we will begin with the short method. So in order to calculate the allocation of general and management using the short method, first of all, we have to calculate the overhead rate and the loading factor, okay? So we'll start with the overhead rate, which is right here. Now, this is the overhead, 2,062,000, which is basically, how did we get to this number? It is the 3.1 million minus all the part that we have already allocated as the fixed program cost. Okay, so it is more or less 1 million, if you recall. So 3.1 minus 1 million is more or less 2.1 million, which is the overhead. Okay, slightly less. So this is the overhead. Now, if I want to calculate the overhead rate, I need to divide this figure by the total cost. Here the total cost is taken or referred to, you can see in the formula, economic map, cell I9. So if we go to the economic map and we look for cell I9, we can see that this is the total expenses of the organization, which, by the way, I also wrote it right here. So it is also possible to just do overhead divided, let's see, divided by total expenses, and then change it to percentage, and we'll get exactly the same figure, 18.7%. This is our overhead rate based on definition number 2. Then the next stage is to calculate the loading factor. So again, I'm showing you the formula. Loading factor is D17, which is 18.7%, divided by 1 minus D17, 1 minus 18.7%. This is exactly the formula that appears here. Okay, this is this formula, and that gives us 23%. All right, this is the number, what is called the iron number, the number that I need to know in order to do the direct apportionment. And now, let's go back to our table. In order to calculate how much of the overhead I want to allocate to program A, what I do is I take, well, this is method number 2. Yeah, okay. So we have the 2 calculation method. The green is using the long one, and the gray is using the short one. So now we work on the gray, and then we'll move back to the green. So in order to calculate my full cost, what I need to do is I need to take my direct budget and add to it 23%. Now, most of the people here who were with us in the next semester remember that when I want to add 23%, I have to multiply by 1 plus 0.23, okay? Those of you who don't, so just to give you, if the price rose by 20% and the price is 100, I have to multiply 100 by 1 plus 0.2, okay? So I add the loading factor to the direct cost, and I reach the full cost of the program. Now, note the difference between what I did before and what I do now. Before, I took the number that I want to allocate and multiply it by the allocation scale. Here, what I do in the gray line, I start with the direct budget, and I add to it the loading factor, the 23%. Okay, so I basically add 23% to this number. Okay, it will be clearer when you do it yourself. And I do that for each one of the program. Eventually, I get the full cost of each program. And then, again, my checkpoint is to sum all these figures, okay, and make sure that the total cost of all the program, 11,009, is identical to the total cost that I had before in the economic map, 11,009. Okay? This is my checkpoint. This is to make sure that there is no mistake in the calculation. Okay? Or there is no double dipping, which we discussed in the previous. This method ensures that we don't do double dipping. Okay? We'll save you from trouble of being in prison or stuff like that. All right, so this is the method, the first method. The second method is calculating the allocation scale. So here we have again an example of how we calculate the allocation scale. Remember that the allocation scale of the direct apportionment is based on the direct budget. So in order to calculate what is the percentage that should be allocated to program A, I have to look at the budget, the direct budget of program A, out of the total direct budget. So if I have 3,575,000 out of 8,947,000, that will be 40%. And program B will be 40.6, etc., etc. Once, obviously, I have to make sure that there is no mistake. I have to make sure that the sum of the allocation scale is 100. And then I apply exactly the same method as with the cost driver. So in order to calculate how much of the general and management should be allocated to program A, what I need to do is to take now the overhead expenses and take 40% of them. Because this budget is 40% of this, then 40% of the overhead will be allocated to program A, and then the same B, C, and D. Again, my checkpoint is that the total of all the allocated amounts exactly equals the overhead. And here in the green line, I reach the full cost, which is direct plus general and management. And you can see, first of all, that these lines are identical. Both methods lead to the same result. And obviously, I need to sum, if I chose to work by this method, again, I need to sum all the full cost and make sure that I have the same amount. Okay? So this is basically what we'll do in terms of allocation. And since this is a bit heavy, we will do one last thing, and then I will refer you to the exercise so you can practice. Once we have the full cost of each program, there is another step that we can do, and that is to calculate the cost per service recipients. If you remember, the cost per service recipients, we saw it already in our previous example, and we know that it is not an indicator for economic decision making. However, it is a relatively good measure for efficiency. So next time we will talk about efficiency and what is the difference. Now we will see only the method of calculation so that you can complete the exercise. So this is relatively simple. If I have 36 service recipients in each one of the programs, so if I want to calculate the cost per unit, okay, then I have to divide the total cost by the number of service recipients. So that will be 122,000. And since here my payments are on a monthly basis, if I want to move from annual to monthly, then what is left to me to do is to divide the annual by 12.